Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century, in which I write daily of my vision of the future of money, in which Bitcoin is the center of the universe. Try my free 7-day trial membership and contact me at ahoffman@CryptoGoldCentral.com to arrange cryptocurrency or precious metal consultations. This week's guest, in his 5th one-on-one appearance, is one of the most well-known jack-of-all-trades like cryptocurrency experts. His Twitter feed at Ansel Lindner is must-read material, while his Bitcoin and Markets podcast, found at BTCMRKTS, I guess someone else took Bitcoin Markets, was recently added to the World Crypto Network lineup. To that end, Ansel, welcome to One-on-One. You're muted.
Thanks for having me, Andy.
I thought you were ignoring me for a second. Okay, so for the first time since I launched CGC 6 months ago, the lethargy of a beaten down sector is definitely taking its toll. I'm working as hard as I can, but like most of you, it at times feels like one is spinning one's wheels. In other words, prototypical conditions to hodl one's Bitcoin and consider what might happen to Bitcoin dominance if the bear market is more protracted than expected. To that end, Ansel, tell me if you think we're in for a long, bitter slog, like the post-Mt. Gox environment, or if it's possible, or even likely, to play out more expediently than past market crashes. And if your answer is simply, I don't know, that's fine too.
Well, nobody knows for sure, obviously, but I think it's going to be a lot shorter. When you look at the Mt. Gox situation, that was what, 75, 80% of the market that went away overnight, and we're not in that situation. So I think a lot of people are expecting it to be a 2014, 2015 type recession, but I don't think it's going to be. I didn't want it to go up so fast. I was talking the whole way up, like I want to see small, consistent gains, and then that October, November, December, it just shot 10x in 8 weeks. So we're still recovering from that. It won't be as long as the 14 to 15 recession.
Right. And of course, Mt. Gox. And, it's just like I was just watching that Rand Neuner. He has his crypto trader thing. And, he's got all the big names, some who I respect, some who I respect a lot less. But the fact is, when you listen to them, they're all just saying the same, kind of the past is prologue arguments like, well, after Mt. Gox, we fell a lot, and then it stayed down for a while and leveled off and then went back up. So I expect that will definitely be what happens again. And the same goes for, anytime it crashes. Well, it crashes, and this is why it crashes, and then it goes right back up. And no, it's just the world is different. First of all, bear markets and bull markets are two different things. Mt. Gox, back then, most people didn't even now, very few people know of Bitcoin, but Bitcoin was more of a curiosity back then than anything. And as you said, Mt. Gox was the market, and people had no idea about scaling, about security, about the future, if it was even viable at the time. So, it's almost comical to make the comparison of then versus now. And of course, if you ask me what happened just now, and you're talking about the 10x move up, and really most of the move up wasn't even October, November. It was really from mid-November. It was really from mid-November after the Bcash attack up until mid-December for Bitcoin, basically 5 weeks. And when it comes to altcoins, most of the altcoin move was in the first 2 or 3 weeks of 2018. So that was a parabolic move, and a large part of it was Wall Street entering on January 1st. Would you disagree with that?
For the altcoins and things?
Yeah.
Yeah, I think that there are a lot of hedge funds got started at the end of 17, beginning of 18, and yeah, they bought it up. And altcoins are super illiquid, so yeah, that had a lot to do with it.
Because again, I can't emphasize enough, and we've been talking about the wall of institutional money forever. When Brian Kelly used those words on a call with Adam Meister back in, I think it was in October, he was talking about the hedge funds that are coming. I wrote about that. I worked at hedge funds. I wrote about it a month earlier. I said, as soon as we get over $6,000, which is $100 billion market cap, those hedge funds are gonna are going to come out of nowhere. And most of them are going to come January 1st, because that's what hedge funds do. They start at the end of quarters, and particularly at the end of years. And Ansel, if you are running a hedge fund that's cryptocurrency, what's your strategy going to be?
Buy and hold, or actually my strategy, if I was a hedge fund holder or owner, would be to get involved with the teams that are launching their ICOs and do some insider trading, get paid to promote an ICO and things. I think that's what happened a lot, earlier this year. And that continues. It all came about, I believe, because Ethereum is just a fundamentally speculative pump. And so then all these people that bought into the crowd sale of Ethereum had hundreds of millions of dollars. Oh, I'm just going to start my own hedge fund. And then how do I do that? Well, I'm going to go and talk to these ICO teams, see where I can add value by pumping for them, and invest that way. So it is just a reinforcing cycle of pumps, and it's crashing now. And that does put some pressure on Bitcoin's price, because people equate Ethereum and these ICOs to real Bitcoin and real cryptocurrency. So it's going to take a while to get through this particular time, I think.
Right. And actually what I was going to bring up, which I will in a second, is just, one half of it, the part that you're talking about. Again, we're talking about why we had this giant bubble. A big part, of course, is, like you're saying, this is completely unregulated space. And most of the players in this space, as far as the amount of actual players, the cryptocurrencies and the ICOs, are centralized and are pumped by marketing teams and individuals who can do that. And of course, as you said, which Ethereum made that possible in itself, becoming, this big, quote, tech stock that everyone had to get into. And on top of it, it was funding everyone and enabling all these shady, let's call them companies, to go public. Many of them that were funded with Ethereum, many of them that were competing with Ethereum, funded by Ethereum. And so people get mad when I use the term Ponzi scheme. In this case, I call it an inadvertent Ponzi scheme, but that's exactly what it is, because you need more and more people to create more ICOs with Ethereum and hold on to it, or find someone to buy it at higher prices. But the other part of what I'm talking about, that's half of it. That's the second half. The other part is people need to realize, when we talk about the wall of money coming in, and yes, some of it, I guess, could be alleviated through futures trading. But again, futures trading is just Bitcoin. And if you're starting a hedge fund and you're charging people 2 and 20, meaning 2% of assets and 20% of profits, you have to offer alpha, meaning above and beyond the index. So if you're a stock hedge fund, you have to beat, let's say, the Russell 2000 if you're a small fund, or the S&P 500 if you're a big fund. And you can't do that by owning Bitcoin solely, because the people who are giving you that money will say, well, I can just buy Bitcoin. So what do? They were diversifying. And when you diversify in a sector in which there's really one, maybe two other relatively liquid things out there, well, guess what happened? Ethereum becomes a monster bubble. Even Ripple becomes a monster bubble. It's not even a crypto, but it has liquidity relative to everything else. And of course, you have Bcash, which is by default, it's one of the most liquid, not so liquid anymore. And so again, when you're trying to diversify, you buy everything. And guess what? They bought everything and created a ginormous, as Simon Dixon would call, bubble. And that's where we stand, and that has to be worked off.
Yeah, I totally agree with that. From the beginning, I said, why do these ICOs, if they really wanted to be secure and have a really good foundation, they wouldn't build on top of Ethereum, because that is like, there's so much contagion. If one, like the Dow, goes down, well, now look, you just fundraised 1,000 Ethereum, say, and the Dow happens, and now what you just raised got cut in half or something like that, right? So there's all this contagion. If you have it on the same platform, why didn't they just fork Ethereum for every single ICO and have their own networks? And now we're kind of seeing EOS, Cardano, these other smart contract platforms, they're taking a lot of the steam out of Ethereum, which in turn takes a lot of steam out of these ICOs. And then we have the SEC. I mean, it looks really, really bad for Ethereum right now. And I've always been an Ethereum bear, but I think I'm going to be finally proven right when all of these things, all this huge Ponzi pump collapses.
Yeah. And again, remember, people, Ethereum traded at less than 3% of a Bitcoin only back in December. And now it's down to 5%. But I suspect it'll get there too. Again, we're going to get to the crypto wars in a second because Ethereum's got other problems. But the fact is that Ethereum is it's in a very competitive space that is very in bad shape right now. And there's a lot of these ICOs and alts that own a lot of it that need to sell. In fact, frankly, I'm shocked that a lot of them didn't sell it at the top for fiat currency. I mean, that's what I would do if I mean, look at that Tezos. They couldn't even get the project off the ground, but they had all of that Ethereum and Bitcoin, and they could have just sold it for fiat at the top, but they didn't. And it shows you just how immature the sector is. But anyway, today's crypto bear market is the first in 2 years, as at this point, it's patently obvious that this isn't a quick news-driven decline, but instead a cyclical trend change that frankly was overdue, as we just said, after such an incredible parabolic run. Let alone given the fact that at least 90% of the altcoins that participated in this historic .com-like boom have not seen the slightest improvement in their specific outlooks, as opposed to Bitcoin, whose victory in the scaling wars, defeat of all hard forks, and technological advancement has been nothing short of spectacular. To that end, the last time a true bear market occurred in this space, roughly 95% of today's altcoins didn't even exist, and 100% of the ICOs. For those worried that something is wrong with Bitcoin, as opposed to plain and simply a healthy consolidation of a prolonged up move, I'm going to ask Ansel about a variety of topics. For each one, Ansel, please tell me if anything is either wrong or potentially very wrong, or you can simply answer that nothing is wrong and nothing particularly worries you. Sound good?
Okay, I'll try.
Okay. First, we're going to start with valuation, which quite obviously is a big, potentially ambiguous topic. However, especially because you do podcasts about the actual financial markets aspect of it, I'd like to hear your views about whether Bitcoin is, quote, overvalued or undervalued at $6,600 and a Mayer multiple lower than 91% of the values in Bitcoin's 9-year history? Or does the market have it close to, if not exactly right?
Oh, do you want short answers or can I go on a little bit?
You can go on.
Okay. Yeah, I mean, it's totally undervalued, but it depends on what your time horizon is, right? So if you want to invest in something for 5 years, it is extremely undervalued, probably 95% undervalued. So, but if you're looking to invest in something for 6 months, it's probably still undervalued, but only by a small amount. So that's what I have to say about Bitcoin. And the Mayer multiple is, it's signaling to me that it's extremely oversold.
Yeah, and by the Mayer multiple, we're talking about it's a simple ratio of the price to the 200-day moving average. There's no science about it other than that it's just a long-term measurement of the trend. And basically, with the 200-day moving average of something like 9,300 at the current price, we are at a Mayer multiple in which only about 8% of the time in Bitcoin's history has it traded more cheaply relative to the 200-day moving average. Now, again, you could say the 200-day moving average is grossly overvalued and it's going to come down over time or whatever. But the fact is that right now, this is as cheap a relative valuation as Bitcoin has ever had. And the only times it's ever been lower have been at times where some pretty bad things were going on or things that create an incredible amount of uncertainty, which we're going to get to in a second, because frankly, I don't see a heck of a lot of uncertainty other than just getting through this, this consolidation of the bubble. So the next topic is the outlook for Bitcoin adoption, as in, has it dramatically weakened, the outlook that is, in recent months in line with the price? Has it stayed the same or perhaps actually increased? One caveat to this question is that currently the vast majority of transactions are related to trading activity, which clearly has significantly declined. and equally clearly has little to do with Bitcoin's store of value use case. So, Ansel, do you believe market expectations for Bitcoin's growth prospects have significantly changed since the price started going down?
I think if you look, I heard a podcast with Trace Mayer the other day, and he was asked the question about dumb money. What percentage during the peak was dumb money, and what percentage is now dumb money left? And he was saying there was still about 50% of the money of the investors in Bitcoin are weak hands, basically. And so I think that adoption has pulled back significantly from the top, but most of that is just weak hands, people that sell or people that bought to trade and they lost everything. So I do think there's fewer holders out there right now, and the big holders are consolidating. They're adding more Bitcoins. So yeah, that's what I have to say about adoption.
Yeah, and again, and when I talk about the transactions being, because again, the major use case for Bitcoin is store of values. Like I was watching that, Samson Mao versus Roger Ver debate. I mean, it's cringeworthy to listen to what one side is saying versus the other. But Roger's going, well, the transactions of Bitcoin are down 50% since December, and I'm going, well, yeah, because there's less trading. That doesn't mean that Bitcoin is less useful for being a store of value. It just means when Coinbase is not sending out as many transactions, then you have less transactions. And the same goes for Bcash, and the same goes for everything. I mean, liquidity is down. In fact, Bcash is being dropped by lots of exchanges right now because the liquidity is so poor, meaning absolutely no one is using it. And that's just across the board in crypto. And as for the dumb money comment, that's a difficult one to say how much actual Bitcoin is owned by dumb money versus how many actual investors are dumb money. That's obviously two different things, because you have whales versus minnows. But I could say certainly from what I've seen, just last year, I'm sure you've seen the same thing. There was, it was like crickets in Bitcoin land until the price started moving up, and then suddenly everyone came in and claimed to be, a proselytizer, and then all of a sudden they all disappeared.
Yeah, about the transaction stuff, I mean, it shouldn't be a surprise to anybody, because the SegWit side of the debate was all about smart scaling, and we had been fighting for batching, using better outputs, input selection, and all these things. So and plus there was spam. So if you take all that out, the transactions probably aren't down. Honestly, it could be the same amount of transactions, real transactions today that were 6 months ago, but it was now it's much more efficient use of those. And so I think it's exactly what we have been saying, and people should have expected that the number of transactions would decrease.
Right, and of course that spam was pretty much all from Bcash. I mean, they were purposely. Yeah, go on.
Oh, I was just gonna say likely, yeah.
Yeah, I mean, they were trying to create the illusion that Bitcoin was too expensive. Of course, their transaction fees were going up too, but the fact is that spam is no longer around, and it's because SegWit has made Bitcoin, more cheaper and more efficient, but more importantly, Bcash just doesn't have the ammo anymore. It doesn't have the miners. They don't have the incentive anymore to spend their time spamming the Bitcoin network. And so it went away, and you went back to a natural state, which is one in which it correlates mostly with trading activity, because that's what people use Bitcoin for storing it. And lately, at the top, you had a lot of people trading it. And the same thing goes for all the other cryptos. The transactions they're obviously less in those because there's not as many people using them, but it's the same thing. Right now, most people either buy and hold, like for Bitcoin, or trade. And the money aspect is going to come down the road. That's not here yet. So next up is the topic of regulation, as in, our market participants. We're talking about why the prices are down and why everyone's so scared. As in, our market participants more worried that the impact of governmental decrees, real or imagined, are going to increase versus the past. To me, this is a decided no. As if the Chinese crypto exchange ban in September didn't harm Bitcoin demand, I'm not sure what governmental decree would. Heck, even the supposed Indian crypto ban the mainstream media crowd was crowing about this week turned out to be completely untrue. as in reality, the only banned actions related to commercial activities that, as we're talking about here, 99% of Bitcoiners have no desire to participate in. So to that end, I don't see any other governments even trying to regulate crypto. The CFTC chairman at last month's Senate hearing actually sounded supportive, and the Chicago Board of Trade is now saying we should have Bitcoin ETFs. So, Ansel, am I missing something? Is there an imminent threat of the sector being damaged by governments? And if not, do you believe it's because governments are indifferent about crypto or simply feel there's no real way to stop it?
I think they don't understand it yet. They still, they don't feel threatened because it's so small, and they don't have any sort of reason to look into it. I don't think that anybody's worried about it, though. I really don't. If you would have asked me that 4 or 5 years ago, I would have said, "Oh yeah, the governments are going to come in. They're going to try to ban it. They're going to do all these things to it. They're going to come after Bitcoiners." I think there's going to be a lot of like maybe going after people for tax evasion or something like that. But regulation wise, I don't really think anybody's worried about it at all.
Right. And of course, tax evasion, all of a sudden, when prices go down, is not an issue. I mean, governments, governments are, people need to understand. And I talked about this for so many years with gold. You can, Google, I wrote an article called Priceless Precious Metals versus Worthless Dollars. And I'm trying to say governments are reactive. They don't just come out and say, hey, we're going to ban Bitcoin today. They ban it or try to ban it when the price is surging and the dollar is crashing and they need to respond to get votes or to maintain power. So yeah, maybe at the peak they might have been considering it, and really all they got around to doing was, making some ICO bans, which probably is a good thing because most of them were scams. But for the most part, right now, governments couldn't care less about Bitcoin because the price is down. They're just happy that it's not causing a threat. And when it was going, and believe me, they are wary of how hard it is to do anything to it. They all know that the Chinese government tried and miserably failed, and they don't want to look stupid doing it. And then you got governments like Japan, which are actively supporting it, and many others. So while down the road it may become a bigger issue, I think it'll only become a bigger issue when once again it's super strong, much stronger than it was this time around. And I don't really think that there's anything in the markets, me personally, that says everyone is scared that these big government regulations are going to come. Is that how you feel, or am I missing something?
Yeah, that's how I feel. No one's worried.
All right. Well, finally, on this particular topic, Ansel, tell me if there are any other specific issues that you think crypto investors are worried about enough to cause and prolong this downturn, as opposed to the sector simply consolidating in preparation for the next move up.
Bitcoiners specifically, or all cryptocurrency people?
Well, let's just focus on Bitcoin right now. We'll get to alts in a second, but
I don't think there's really anything that we're worried about. Maybe the price going down even further, but we all know deep down that it's going to be much, much higher. So I think the main strong hands out there left are really comfortable. They're excited. There's more excitement that I feel than any sort of worry about anything.
Right. And there's more, again, this sector is dominated by whales. And I mean, I don't mean that everyone who's a whale is someone who owns like 5,000 Bitcoin. I'm talking about people who have sizable positions who have been around a long time and are like us. They look at the situation and they say, look, we are, let's put quotes around it, experts, because if you've been around a few years and you're a reasonably smart person, you probably are more of an expert than 99% of the world. And we look at this and go, per this conversation, what exactly are we so worried about? I mean, I used to wake up terrified every day for 2 years, particularly last year, as the price was going up 20x, going, oh, please don't be some horrible thing overnight. The Chinese did this and this and that. I mean, I wake up in the morning saying, I hope the price didn't go down, but it's not because I'm worried about anything. And again, there's nothing coming out. The network is secure. It's growing. The technology is advancing. There's no reason to believe that it wouldn't. The legacy financial markets are getting increasingly shaky. And so, if there are people like me who are thinking like that, think about the the people who are really whales, how they're thinking. Because again, with $1 billion right now, you can buy what, 21,000 Bitcoins right now? I forgot what the number was. I mean, you can.
Oh, I don't know. Sounds like not very many Bitcoins.
No, but I mean, given the float, right? So let's say $1 billion, or yeah, let's say $100 million. That's chump change in the financial world because there's $300 trillion in financial assets. So for $100 million, because I'm so tired right now, you can buy 15,000 Bitcoins. So basically, let's say $120 million dollars, you can go buy 21,000 Bitcoins. That's a sizable, that's 0.1% of all the Bitcoin on earth.
Yeah.
I mean, and for times 10. So for $1 billion, you can buy 1% of all the Bitcoin, assuming that it was available for sale. And there's plenty of whales out there who at these prices are thinking like us.
Yeah. But I don't think there's, like you were talking about, I don't think there's enough liquidity in the market to do that. As soon as they started building a position like that, the supply on the exchanges would just dry up. I really don't think there is that much Bitcoin on the exchanges to buy. They just trade back and forth to each other. We saw that with the Mt. Gox stuff, how they were, I don't know how much they dumped, like 50,000 Bitcoins, and it really forced the price down. So I just
35,000, yeah.
Yeah, I don't think there is a ton of liquidity out there. And if they do start making a position like that, the price is going to skyrocket.
Right. And of course, now that we've got past that $6,000, meaning 100 billion market cap, this is pretty much investable to everybody. It's investable to institutions, central banks. Well, it's always investable to billionaires, but I don't know what their threshold is. But the point is, there's a lot of people out there who are smart to what's going on in Bitcoin. And it's good. So when people say, well, it's going to fall, I saw the fluffy ponies going, I think 4,000 would be the really bad level. And I'm going, why 4,000? That's very arbitrary. And then others, I see technical analysis that can go here. And I'm going, yeah, but at what point do these whales start coming in and going, look, I already have a good position. I can put in $100 million and get 0.1%. I can get a bunch of my buddies to put in $1 billion and we can get 1%. And like you said, it's not available for sale. So, is this resistance point here? I mean, is it a coincidence that we keep hitting bottom and consolidating above this $100 billion level where the whales are? I don't know, but I personally think that that's the key. That's the thing that people know. People just don't want to realize is just how much smart money is out there viewing what's going on at these prices.
Yeah, and we have people investing in billionaires investing into Lightning Labs and companies like that. So people are definitely smart to this, and that could be the case that the $100 billion is like a hard floor. We'll have to see.
Yeah, I mean, it was the actual floor in February.
Yeah, like the exact floor.
Exact, almost to the dollar, and we'll see what it is now. But certainly, I'm not predicting anything here. I'm just saying I see what I see here. I see a lot of churning in the 6,000s. And more importantly, what we're talking about, fundamentals. There's absolutely nothing wrong with Bitcoin's fundamentals. I've never felt better about it. You've never, and pretty much anyone that we speak to in the space that we have respect for has said that. So we'll see if we're wrong. Now we're going to move on, though, to altcoins.
Okay.
And the topic, basically, I want people to consider here is the concept of rebalancing, as in using the bear market conditions to optimize one's crypto portfolio. For myself and likely Ansel, there's nothing to do as being a Bitcoin maximalist in an increasingly Bitcoin maximalist environment. All we need to do is hodl. If not, you have some serious decisions to make, of which the paper losses you have already have should decidedly not be a primary input. Ansel, am I right that you consider a Bitcoin maximalist portfolio optimal? And if not, what altcoins, if any, are worth holding in such an environment in which the ability to appreciate relative to Bitcoin has never been more difficult?
I think if you're not a day trader that, and your risk tolerance is really, really high, then you can diversify a tiny bit into some altcoins. But for 99.9% of people out there, I think Bitcoin, all Bitcoin portfolio is the best way to go.
Right, because I mean, if you own altcoins now, it doesn't matter. At the moment, I'm not even making my judgments. People know how I feel. But if you own altcoins right now, you are going to wake up every morning terrified. I mean, like I wake up in the morning now thinking, oh man, I hope Bitcoin didn't go down. But if I was holding a lot of altcoins, I'd be thinking, I hope my altcoin didn't fall 15% overnight, or that something horrible actually happened to it. Because while there are some that may do fine, obviously none have lately, but a lot of bad things are going to start happening to things that are not Bitcoin if this bear market doesn't turn around quickly, which it may or may not do. So on this topic, I want to discuss something, again, few want to admit, despite it playing out right before our eyes, i.e. the altcoin internal wars that, in my view, will prolong the bear market, particularly relative to Bitcoin, for some time to come. Why it's occurred is obvious, as now that the sector is in decline, there are a lot of unhappy investors looking for ways to improve on what they perceive to be mismanaged centralized coins. Monero is the poster child for this trend, as it is on the verge of being split into not 2, but 3 separate coins. Ethereum 2 could fork yet again, or equally scary, see hash rate move to Ethereum Classic if Vitalik gets his wish of shifting to proof of stake. And even Litecoin was challenged by Litecoin Cash, which comically fizzled out in a couple of weeks. And I'm sure others will experience such crypto wars too. But my money is on Bcash, which in my view will at some point come under attack when investors get angry enough for their own, to put it mildly, belief in mismanagement. Ansel, do you think I'm exaggerating what's emerging in the altcoin sector, be it in Monero, Ethereum, Litecoin, Bcash, or the sector in general? If so, why is it occurring in your view? What kind of outcomes should we expect, and how will Bitcoin dominance likely be impacted?
Yeah, that's very interesting. I don't keep on top of the fork situation, especially in altcoins, very much, but I am aware of a lot of the stuff going on. I think that I said a while ago that altcoin season isn't coming back. It's going to be fork season. I thought that was going to be Bitcoin's fork season, but maybe it's these altcoins because they're getting in on the party now too. So I think fundamentally altcoins are flawed. They're all more centralized than Bitcoin. They all have much less development, much fewer strong hands, and so it could, these altcoin, what'd you call them? Internal wars. They could destroy the entire altcoin sector, and Bitcoin will come out on top. I had a tweet the other day that said that pretty soon it's going to be cool again to be a Bitcoin maximalist. And I really do see that coming in the very near term, probably 6 months from now.
Yeah, and it's funny you should say fork season, going from Bitcoin alts, because I had been saying for some time that I thought the Bitcoin forks was going to end quickly, simply because they're having diminishing returns. I mean, the only one that really succeeded was Bcash, because A, it was the first one, B, it was at the height of excitement about what forks can do, and 3, it had a very big player behind it with big resources. But after that, it's been a misery. I mean, B Gold was the second out of the gate, so it initially had a little success, but it's worth very little right now. And then after that, people are just realizing, well, they're just clones of Bitcoin. I mean, there's not much to it. You can do other things. There are alts that are being created that are attempting, as I say, I call it cryptocurrency versus securities, that are trying to offer something to investors with a use case that is valuable. And some will be able to do that. Most will not. But, is it fork season in the altcoins? I don't even think of it in terms of fork. I think of it in terms of that it's just so easy to try something different. This in Bitcoin, look at how much difficulty. I mean, like Roger Ver, look what he went through to try to create Bcash. He didn't even want to create Bcash. It's just a matter of you have to go up against the whole global Bitcoin community to do anything. And ultimately, they weren't able to stop it from SegWit, whereas someone could say, hey, I want to do Monero V. And then another guy says, hey, I want to do Monero Zero. And bam, you got 3 coins right there, and they're all fighting each other.
Yeah, and it all has to do with proof of work and things like that. A lot of people like Bitcoin Max. Well, a lot of Bitcoin maximalists kind of liked Monero because of the censorship resistance. It was pretty decentralized, et cetera, et cetera. But the problem they had was the CPU mining, and this was really hard for people to grasp before what they're going through now, because ASICs actually protect you. They make it so there is no better way to do what you're doing. You're the tip of the spear. But with CPU mining, you have to worry about if they're ever create an ASIC or if it can be GPU mined. And you're constantly having to defend your CPU coin because it's fundamentally weaker than if you had a ASIC. That's very interesting dynamic. And we're going to learn a lot about why Bitcoin maximalists have been right all along, and that all of the altcoins are 99% just fluff and speculation.
Yeah, they were money grabs. They were like .coms. Back then, they were financed by Wall Street. I was part of it. I was in the oil sector. I was forced to try to create money grabs in the oil sector with the internet, and that's exactly what 99% were here. And for anyone who says, "Oh, how could you say that about altcoins?" It's pretty obvious that's what happened. I mean, they all came around right at the end, claiming to have use cases that most people have no idea what they're talking about. They didn't even really have funding. They just said, "Hey, give us money, give us Ethereum." Or we just create out of thin air, and really they just got pumped up by Wall Street for a few weeks, and that was the end of them. But you go on.
I also think the serious investors in the space know that. They definitely know that. They don't even really care about the Monero wars, to be honest with you, because they know that they were all pumped up from the beginning. It's some little minnows, like you called them, fighting over scraps. It's not the real whales. The real whales are watching Bitcoin, and they're trying to get out of Ethereum. That's what I think.
Yeah. Again, Ethereum, if the hedge funds, when they came in, they have to diversify. Well, of course, the first thing they diversify into is Ethereum. And that's why when Bitcoin was falling, because, well, you can say the Mt. Gox well, but the point is it peaked December 17th. Ethereum got pumped right after January 1st. It started about the 5th or so. First, it was Litecoin that went up like 150% in like 2 days. And then it was Ethereum. And it was because all the hedge fund managers were running in saying this is like the Cisco or the Intel from the .com era. And they didn't even know what they were buying. They just knew it was liquid, and it just built upon itself. But we go back to Monero, and I was talking about this with someone the other day. Because if you ask, even now, certainly a few weeks ago, you say, okay, what altcoins are actually doing things, like actually have a use case? You can agree that it's viable, or that it's a good use case, but it is. And everyone will say, well, Bitcoin, Ethereum, and Monero. That's what everyone says. And all the other ones, I've never heard anyone say that there's really any other one that actually does anything. And so we're talking about Ethereum, where its real use case was just to create money grabs in a Ponzi-esque fashion. And it's a competitive industry. So even if you believe what they do is so great, aside from the fact that what they do is completely dead right now, they have a lot of competition, including, of course, Bitcoin, which ultimately can do all that stuff. And then you have Monero, which, aside from the fact that it's splitting itself in 3 parts, people, again, it was one of these things, oh, privacy, but there's lots of privacy coins out there. I mean, you have Zcash, you have Be Private, you have 3 Moneros. Of course, Bitcoin will do it. There's others out there. So again, you're looking at all this stuff and you're going, where are the use cases aside from Bitcoin?
Yeah, I totally agree with you 100% on what you just said. I think the privacy coins are diluting themselves. And with money, right, there's a network effect of people owning one money. And so if you're going to want to own the thing that is the most useful, and some people will say, oh, that's Ethereum because the ICOs are built on top of Ethereum and yada, yada, yada. But that's not the case. It's Bitcoin. Bitcoin is going to have privacy. It's going to have smart contracts. It already has smart contracts, and it has this decentralization that keeps it protected from attacks. So overall, yeah, it's the the decentralization and the network effect of one thing that is money, and that's what Bitcoin's going to be.
Right. And the thing with privacy, it's so comical because, I mean, who in the Bitcoin community is really looking for, quote, privacy? I mean, let's face it, Bitcoin is already pretty darn private. I mean, yes, theoretically, if the government was after a specific person and put all their resources into it, yes, they could track someone's transactions, so they're not private. But for the most part, Bitcoin is 1,000 times more private than anything anyone's ever done in the legacy financial system. And isn't he really looking for privacy right now? And of course, down the road, it will be able to do it better than anything else. But the biggest pink elephant in the room, and that's what's it's so funny when people go on, well, Bitcoin, I mean, why would you use that for when you can have Monero? It's so much more private, or be private, which hasn't even come out, or whatever it is. They just forked off of Zcash, so everyone claims it's a privacy coin, and then there's Zcash. These are not secure or liquid networks. I mean, I don't care about privacy if I'm worried about actually losing my money, or equally important, having no liquidity in my money. I mean, how much liquidity is there in the Zcash or the Be Private networks, or even Monero for that matter?
Yeah, exactly. There's
security.
Yeah, and then you can look at the darknet markets. I saw a study from probably end of last year, I think, and they looked at because I heard, oh, Monero is being used now in the darknet markets. Well, they in this study, which is very hard to study these darknet markets and all these things, but they said that Bitcoin was used for 80% still. Monero was only 15%, and then you had 5% that was some other coins. So even in the face, the use cases that need the most privacy are still Bitcoin. It doesn't matter.
I mean, put it this way. Let's say you're in the dark market and you want to buy $500 of cocaine or something like that. Okay. Yeah, maybe you use Monero for it. It's very private. But what if you wanted to buy $50,000 of cocaine with it? Do you think the seller would take $50,000 of Monero? Would they take $50,000 of Be Private or Monero Zero? Of course not. I mean, it has to be a store of value to be money. And that's the thing that Roger Ver does not get. Because, when Samson Mao is on the call and they're saying, what's the difference between Bitcoin and Bitcoin Cash or Bcash? And Samson Mao is saying, well, if you ask someone who said, I want to be paid in Bitcoin, and they said, okay, I'll give you Bcash, would they take it? And the answer is no. And so I don't care how private your coin is. Would someone who is selling, say, $20,000 of cocaine want Bitcoin private or Monero V instead of Bitcoin?
Right, because the seller is going to be less worried about the privacy, I think, than on average than the buyer is. Yeah, I don't see. I mean, privacy is a very big deal. Fungibility is a big deal, and it will come to Bitcoin relatively soon. We're talking probably by the end of this year or by the end of next year. And all of these privacy coins will have no reason to exist.
Yeah. I mean, in Lightning Network, from what I'm told, a big part of it is privacy. And I remember like my first one-on-one was with Charlie Lee. It was in September. We had other things to talk about because it was literally the day of the Chinese ban. So there's all this stuff going on. But it was right after SegWit, and he was saying, yeah, right now the priority in Bitcoin is scaling. And right after we do scaling, we'll do privacy. So, we'll probably look up a year or two from now, and just like everyone's going, holy cow, look at the Lightning Network. It's a precursor for everything that's coming soon to scaling. It'll be the same kind of thing. There'll be prototypes out there in alpha or whatever you call beta, I don't know, showing privacy in Bitcoin, and everyone will be going, so why did we spend all this time with privacy coins? It was just a hook. It was a Wall Street type hook. Privacy coins. That's like what Brian Kelly would talk about on CNBC.
Yeah, and I think this highlights Bitcoin's free market aspect. So in the free market, you have, if there's true demand for something, someone will fulfill that demand. So if there's real true demand for privacy, Bitcoin will provide it, because Bitcoin is decentralized, open source, permissionless. So if you don't see it built for Bitcoin, there's probably no demand in the first place.
Yeah. I mean, the big picture here is, and we've talked about it before, you and I and others, when we had the boom in the late 1990s with the internet, the boom was the internet. The dot-coms were the money grabs, of which there were a handful that actually figured out ways to create value for investors. Some of them did it during the time of the boom. Most of them didn't. Most of them didn't come to afterward. And even ones people say, well, Amazon, but Amazon was pretty much dead in the water for 10 years. It really wasn't until way, way past the dot-com bust when Amazon took off. So again, what's going on, this is a Bitcoin revolution. As much as people want to call it a crypto revolution, it's a Bitcoin revolution in which there will be other cryptocurrencies, most of which are not, I hate the word currency because a lot of them are just securities. They're like stocks. They're not going to be money. And that's what the real excitement is. It's that Bitcoin is going to replace money and or store of value.
Totally agree. I think we might differ a little bit on how many blockchains there will be in the world. I don't know, but I think there'll be one blockchain. Everything will be a token on top of Bitcoin. We have Counterparty that can do all the smart contract stuff Ethereum can do. We have RSK that can do that. Now we have Lightning. I mean, it's just so Bitcoin is the epicenter for everything in crypto. I do think there's going to be one blockchain though in the future.
Right. And I'm not saying, I'm not even talking about number of blockchains. I'm just saying that I don't think that all altcoins will go to zero because some, I wrote that article the other day, cryptocurrencies versus securities. And that's like when I talk about B Rhodium, I don't expect it to be a money. I just think that they have something that investors who are looking to make money might want to invest in. I could be wrong about that. But there will be things that offer something. But if you offer a actual technology advancement, you're most likely going to be subsumed by Bitcoin over the, whether it's in a month or a year. Eventually, if it's something valuable, that's where it's going to go. So finally, I'd like to give some perspective to those worried that the bear market symbolizes the end of Bitcoin from someone who's been around long enough to have seen it all. Keeping in mind, of course, that the bear market, with quotes around it, has left prices nearly 10 times higher than a year ago at levels that weren't seen for the first time until November. So Ansel, how would you rank the current Bitcoin environment in terms of fundamentals, sentiment, technical analysis, and or valuation compared to past bear markets? I mean, is this the end in your view or the beginning? And to that end, when all is said and done, what do you think the biggest crypto stories of the second half of 2018 will be?
I think that we are at the beginning stages of this Bitcoinization, hyper Bitcoinization. In this bear market specifically, we're probably about halfway through with it. We'll have to see how things go. I have lived through two other big pullbacks, the two other big bear markets. And this feels, I think everything's speeding up. So if you look at that technology adoption curve, it goes parabolic. And I think we are starting to hit this parabolic thing. So this bear market probably will be shorter than other ones, and it'll catch people off guard. It'll catch all the bears off guard, and we'll probably be at all-time highs by third quarter of this year, I would expect. And let's see, what else did you ask in there?
Well, the biggest question was where do we rank in compared to other markets? I mean, I was talking about fundamentals, obviously you just mentioned, but sentiment, technical analysis, valuation. I mean, can you even equate them to other bear markets?
No, I think fundamentally we're in a good place. If you look at mining, the difficulty keeps going up. We see mining getting more decentralized, which is really, really good. You see fundamentals like the Lightning Network getting added. What else? Transaction fees are really low. Development is going off the charts. I talk about development on my podcast all the time, about the number of pull requests and closed issues and things on Bitcoin Core versus, like, say, Ethereum. And Bitcoin is 6 to 7 times more active than other cryptos. So I think fundamentally everything is very exciting for Bitcoin. And it's hard to, as a maximalist and someone who's been around a long time, to look at the charts every day and just see, oh, we went down another $200 when it should be the opposite way, because the fundamentals are continually snowballing on themselves. So the snapback will be really violent, I think.
Yeah, because of course, as we're saying, this is a very thin market. We all know there's only really a couple of million available for sale, Bitcoins that is, at any given time. There's a lot lost, there's a lot that's being hodled, and there's just plain not a lot to start with. So there is a lot of trading going on in thin markets, and it will get people by surprise. Because you're talking about things, the decentralized mining and all these things. I mean, these were the things that were issues last year when the price was going up. Now they're not issues. And the price is going down. So obviously there's a disconnect there. I mean, it's like when you listen to Francis Puglia talking about, he's got so many businesses up there in Canada, but he's spending more time than anything securing space for miners that all want to, we went from having like 3 or 4 miners dominating. I bet 2 years from now, Bitmain will be like this tiny piece on the pie. There's just that much interest. And we're talking about governments too, like the Japanese government, the Russian government, all these governments. So I think that, like you said, that fundamentals are ridiculous. I can't really equate sentiment because it's a lot more people in it now. The losses are just as big as they were back then, but there's a lot more people and a lot more things going on. And valuation, as we talked about earlier, I mean, you have any final thoughts on valuation at this level?
No, I think it can't go much lower. A lot of people were talking about 1,800 or something, like 1,200 to test the last all-time high for Mt. Gox. There's in my mind, there's no way that it's going that low. And if everyone always says, yeah, they'll buy if it goes that low, but I truly will. I'll probably get a second mortgage on my house and go all in.
Yeah, I mean, again, I go back to Trace Mayer said some time ago when he said, look at the price, it's gone up so much. And he's gone, yeah, but there's a big difference in the pre-SegWit Bitcoin and the post-SegWit Bitcoin. They are worth vastly different amounts of money because once we had SegWit, we A, won the scaling wars, and B, enabled Bitcoin to scale. So completely different things. So to go to $100 billion market cap, which was perhaps a big deal, 20 years ago, but now we're in a $200 or $300 trillion legacy asset market with some unbelievably overvalued assets. I mean, the bonds and stocks are literally held up by governments. I was just reading the other day that, look, the Bank of Japan already owns like 2/3 of all the ETFs, and their biggest month ever of buying stock ETFs was last month simply because the prices went down a tiny bit. So between these massively overvalued legacy assets, which are going to be used less and less as people start to, the decentralized revolution goes on, $100 billion is chump change. I mean, there's like 1,000 billionaires in the world, 1,000. And when we say billionaires, I'm not talking about 1 billion. There's guys like who have 15, 20 billion. For them, they could buy all of Bitcoin if it was available, and it would be chump change. So yeah, I agree. People go, well, the previous high was 1,300, so we have to retest it. To me, there's only one thing that gets us $1,300, and that Bitcoin is hacked, and that's the end of Bitcoin.
Right. I agree. One of my big things I've been pushing on my podcast recently is to drive home that blockchains aren't magic. Hopefully we will see the death of this blockchain narrative where, blockchain is the technology behind Bitcoin. Now we're going to see that it's Bitcoin is the technology behind blockchain. And when we saw all these banks and all these big companies do their blockchain initiatives, just wait till we see them making their Bitcoin initiatives where they're just buying up Bitcoin. That's probably coming in the next 12 months, I'm guessing.
Yeah, of course. And, Tone would equate it to internet versus intranet. Well, yeah, there's blockchains for everything. I mean, I could have a blockchain at my house for the Hoffman household, but there's only one real functioning, secure, globally decentralized, and by the way, large blockchain, and that's Bitcoin. And everything else is just a copy. And yeah, I mean, maybe there'll be other blockchains. I don't know what exactly that means, but the fact is, again, the revolution is Bitcoin. So for people who are thinking about rebalancing their portfolios right now, And again, this is the time to do it because this is the time where you will be able to get Bitcoin cheap if that's what you want to do. Remember, the internet was the revolution in 2000, not the dot-coms, just like Bitcoin is the revolution today. So with that, we'll conclude today's podcast featuring one of the Bitcoin, I have communists, community's most active, prolific, and informative tweeters and podcasters, Ansel Lindner. Follow him at Ansel Lindner and his Bitcoin and Markets podcast at BTCMRKTS. As for me, please come over to cryptogoldcentral.com and check me out. Try a free trial subscription, or email me at ahoffman or go to my Twitter at Andy_Hoffman_CG. So thanks very much and have a great crypto day.
Thanks, Andy.